webinar. We're very sorry for the delay, but we're very happy to start the webinar now. We give people connected one more second to be in the room. Yeah, I think it's safe to start. So a very warm welcome, colleagues, and thank you all for joining today's webinar, Financing Food and Rural Development, co-hosted by the Global Donor Platform for Rural Development and the Shamba Center for Food and Climate. I am Maurizio Navarra, Senior Partnership Officer and Coordinator of the Secretariat of the Global Donor Platform. Today's webinar is the second in a short series of platform events designed to help the development community gain a deeper understanding of development finance and donor approaches to agriculture, rural development, and food. Finance is clearly a key component for advancing food and development goals, particularly in this critical moment, with only 6 years left until 2030. Now, the actors in food systems, agriculture, and development spaces are becoming more and more interested in different financing tools and mechanisms, as well as emerging trends and future directions in development finance. Now, this was emphasized in a 2024 edition of the State of Food Security and Nutrition in the World, the SOFI Report, released in July, which is entirely dedicated to financing for food security and nutrition, and which we'll be discussing today. Likewise, next year's important rural development report, developed under IFAD's leadership, will be devoted to financing rural transformation. The first webinar in this series was organized this past June on decoding the fundamentals of development finance, where we reviewed the main concepts and terms of development finance, provided an overview of the development financing architecture, and outlined key emerging issues and directions in development finance. If you missed it, the recording is available on our website, and the link has just been posted in the chat. I guess my colleagues can post the links of the webinar in the chat. Don't miss it. It was very, very useful, we think. Now, the platform will contribute to this important international agenda also with our 2024 Annual General Assembly, the AGA, which will take place on the 26th and 27th of November, which is focused entirely on financing food system transformation and rural revitalization. You're all welcome and encouraged to attend either in person here in Rome or online. The event page and registration links are also being posted in the chat. Now, it is also important to note that 2025 will also be a very significant year for the international debate on financing for development. The fourth conference on financing for development will take place in Madrid in July 2025, and it will assess the progress made in implementation of the Monterrey Consensus, the Doha Declaration, and the Addis Ababa Action Agenda, three of the most important reference frameworks for the donor community on financing and the larger development community alike. Now, the Addis Ababa Action Agenda is still today one of the most relevant frameworks for financing, and it will be paramount for the donor community to continue the conversations on issues like domestic public resources, domestic and international private business and finance, international development cooperation, trade as an engine for development, debt, and debt sustainability. Now, the donor platform will make sure to follow the development of the conference and contribute to its outcomes. And this webinar is meant to be one of the steps towards that direction. Now, back to today's session, which is meant to provide an overview of the key messages and recommendations of the SOFI report, the recently released SOFI report, discuss the key challenges in operationalizing the recommendations of the SOFI, discuss the implication of the report for partner country governments, but also donors and development partners, and discuss the implication of the report and its findings for the future of financing for food and rural development. Now, please be aware that this event is being recorded and the stream will be posted on our website. It is also being web streamed on YouTube. We want this session to be as interactive and useful as possible. Use the chat box throughout the session to post questions and comments for the speakers. There will also be a longer Q&A session after the initial presentation and panel discussion where you will be able to raise your hand and ask your questions live. So welcome again, all of you. And with this, I think we're ready to start the session. I'm happy to now pass the floor to Jim Woodhill, Senior Advisor to the Donor Platform and our moderator for today's webinar. Jim, over to you. Thank you.
Great. Thank you. Thank you very much, Maurizio. And good morning, good afternoon, good evening, depending whereabouts in the world you're connecting with. It's great to have so many people interested. I think we're up over the 80 people linked in already, but I think we had over 250 registrations. So clearly a huge amount of interest in this topic. And as Maurizio mentioned, This is sort of a warm-up or a lead-in to the donor platform's annual General Assembly, which will focus specifically on this topic of financing food systems, food security, and rural development. We've got a great lineup of people to contribute this afternoon, and as well, we're looking forward very much to your own inputs and discussions as we go through the afternoon. So as Maurizio indicated already, we'll have a presentation from David Laborda, who is the Director of the Agri-Food Economics and Policy Division in FAO, giving us an overview of the SOFI report, which I think has some extremely interesting messages around the big challenges that are being faced around financing the achievement of SDG 2. We'll then move into some questions and answer around that, which then takes us into a panel discussion, and I'll introduce the panelists when we come to that section. And then we'll move on to some more opportunity for input and audience reaction. So do please jump into the discussion during the afternoon, and also leave messages or questions or comments in the chat as well. So I think with that, I can hand over to you, David, to give us a bit of an overview about what the SOFI has arrived at, what are some of the challenges, but I think also very importantly, what are some of the big opportunities for trying to tackle this big mismatch we have between the challenges of food security and nutrition and achieving the right sort of financing levels. So David, over to you. Oh, where you're not hearing you just yet, David.
Now you can hear me.
Now we can hear you. Fantastic.
Thank you, Jim, and thanks everyone for being here with us today to discuss, with this very important topic and what are the means of implementation in order to tackle with what remain a major issue for all of us in terms of not delivering on these promises to achieve food security and nutrition for all. And the SOFI this year, as every year, is giving you an update of where we stand in terms of food insecurity and malnutrition, but also focus, like every year, on a specific topic, and the topic of the year is finance. Obviously, that's, as I've said, an important mean of implementation, but you also can guess that the specific timing is not neutral. Maurizio had already said that, we are 6 years before the Agenda 2030, but this year, even the COP 29 will talk about finance. We are going to have the Nutrition for Growth Summit at the beginning of next year, and then the Finance for Development conference in Spain. So it's really time to talk about money, I will say. Now, in the reports, we always start with new data on where we stand in terms of food security and nutrition, or unfortunately, and the current trend is more to talk about food insecurity and malnutrition. Because, before we talk about the solution or how we pay for, we need to be realistic about the scale of the problems and in which direction we have moved recently. And today we have 733 million people that are in chronic hunger. So that 1 person over 11. In Africa, it's 1 over 5. Our projections show that even without new major shocks, so new, more strong climate shock, without new, more conflict, and to recover from the pandemic and recover growth, we will still end up with 582 million people in chronic hunger by 2030. And so it's time to accelerate. But beyond the chronic hunger, we also have more than 2 billion people that are food insecure, and nearly 3 billion people that cannot afford healthy diets. And that has implication also in terms of nutrition target. So here you see the evolution is really the unfortunate situation that when in 2015 we launched the Agenda 2030, and we committed all together to deliver on this promise to end hunger by 2030, that where actually progresses have stopped. And then starting in particular in 2017, the situation started to deteriorate. And we are now in a situation, as I've said, we have 733 million people in chronic hunger. As you see on this graph, that 152 million more than actually just before the COVID crisis. But that's unfortunately 160 million more than in 2015. And we have to go back 15 years in time, basically in the aftermath of the big financial crisis of 2007 and 2008 to have such level of hunger. And compared to the 2007 and 8 crisis, we are not recovering at the same speed. You see on the left-hand side of this graph, 2007-8, we had the crisis, high level of hunger, but then we continue to make progresses. When right now we have a situation where we have a plateau. Now, this is not all doom and gloom, because here you just see the evolution in terms of percentage point of the population of the different regions in the world. And what you can see is actually if we have seen a deterioration in Africa, in Middle East, in the Caribbean region, we see also recovery taking place in Latin America and Caribbean or Asia. So it means that when you are implementing the right policies, that you do the right spending, you can solve this problem. But of course, the right policies are costly. And that's really where the question of finance starts to become critical, because like with everything, unfortunately, all the different countries and regions are not on an equal footing in terms of access to financial numbers. As I've said in my introduction, now, if we look about the projection in a business as usual situation, we will still end up with 581 million people in chronic hunger by 2030, and that was still actually 130 million more than in the projection we did before the COVID crisis. So we have this memory effect, we have this hysteresis, and that means that really we need to come with a significant stimulus package if we want to deliver. But here also, like with any stimulus package, the question is where you are going to find the money to do it. I have talked a lot about hunger. I just want to say that for several nutrition indicators, we have a similar pattern, meaning that we make some progress on some of them, like in terms of exclusive breastfeeding. But on anemia, unfortunately, we are moving even in the wrong direction. And on low birth weight or wasting, we are not making progresses as we should see. And at the same time, we have rising obesity, both for kids and for adults. And that's where this question of food security and nutrition is also linked, for instance, to the agri-food system transformation. I will talk a bit more, but really the SOFI is really focusing on the food security and nutrition and the investment we want to do for them and the financing we need to do for them. And so it means it's actually a more narrow issue, because we are not here talking about the investment that are needed, to solve the problem, for example, of the upper middle class that are still food consumer, but really focusing on the most vulnerable people and finding tools to finance what is needed to deal with the needs of the most vulnerable people, in particular in the most vulnerable countries. And obviously, this is a great report written by a great team, but also I want to remind everyone that the SOFI is a multi-UN agencies. So we are 5 UN agencies to contribute to it. There's very few reports that year after year manage to do that. And that's what we have all to come together to send this strong signal. So based on the situation, unfortunately, we don't have enough money today to deal with the needs. Some of this is also due because sometimes it's difficult to agree on what we're exactly talking about. So there is a lack of definition. And if we don't define things properly, it's actually very difficult to get people organized. What we see also is when some finance track, like ODA, so international aid, the money linked to private sectors is more difficult to map, including also the domestic expenditure. Now, something that is pretty important to keep in mind is, as I've said, not all countries have access to the same amount of finance. And unfortunately, the most vulnerable countries, the ones that have also been hurt by recent shock, like conflict, like climate, like economic crisis, appears to be also the more risky countries. And basically, financial actors doesn't like to invest in very risky place. So we really need to change incentive. And as I will show you a few examples, we can actually have a typology of how we can better map the type of financial instrument we want to use, including the innovating one with the different country configuration. And finally, we also have to be clear, that today we are highly fragmented. We also have bias. We prefer as a collective group, spend money sometimes on easy win than on the difficult situation. And so we let some configuration continue to deteriorate. And so there is really a need to change what we do, how we do it, at the same time that we try to do more. And to give you some of the illustration, you know, when we talk about the problem of definition, here you see on the slide that basically between more narrow definition on food security and nutrition spending to the more inclusive one, you see that we can move from 7 billion a year to 62 billion a year. And it's not that these numbers are wrong. They just represent different concepts, different coverage. We all know that, for instance, increasing education for girls in rural area will play an important role in terms of food security and nutrition, but primarily it's an education spending. So do you include it or not in the definition? And that's what in the SOFI we explain and we propose an operational solution. That's how much money we spend, but when also we see about how much money we need, actually we see this wide range from 77, 80 billion dollars a year of investment, both by private and public, up to actually 15 trillion in some estimate we do. When the agri-food system transformation and providing all around the world healthy diets for all will lead to this in a sustainable manner, will lead to these very big numbers. When it's about focusing, for example, on ODA for the most vulnerable countries, in the context of the CRS 2030 project, we had much lower estimate around 14 billion. So, the scope of the problems and what type of money you need to mobilize to address problem in middle-income countries or in low-income countries is going to be different. But really what we want is to make sure that we get things done. And so that's why we propose this definition in the SOFI that really is going to talk about, the what, the how, the who, and starting with the basic thing that when we talk about food security and nutrition, we need to look at the intervention that are linked to food consumption, and in particular, the 4 pillars of the food security definition, but also things related to health. Your health environment is going to be key in terms of how you translate what you eat in terms of nourishment for your body. And that's for us, the first part of the definition that we call the core definition. But as we have seen recently, spending money on the symptom or on some of the core elements are not going to solve the structural problem that are the root causes of food insecurity. And it's about climate, it's about conflict, it's about economic shock, it's about having inequalities in our system. And so all the money we spend on that, when it's well targeted, is actually very instrumental to deliver on food security and nutrition. And on how we should spend this money, you will see also that we have different pathways. Some are about, making sure we build resilience to avoid this different shock, but also that we really solve these structural factors. And that's going to be highly country dependent in terms of context. But at the end, who is going to do that? You have also the role of the public sectors within countries, so domestic taxpayer money spent on domestic actions. You have also the international public sectors with the ODA. But last but not least, you have also the private sectors, both in terms of domestic spending and foreign spending. And just to give you an order of magnitude, the public ODA, when we use this extended definition, is going to be about $72 billion a year. But even with partial mapping of the private finance through FDI, through remittances, contributing to food security and nutrition, we are already above 90 billion a year. So really, we have to see this co-action between private and public fundings and understand also what type of action is better funded by which actor. And why I'm just talking about the root causes, because really, when initially I was talking about the rise in hunger, you can really see how the rise in hunger have been concentrated in countries that are impacted by economic downturn, by rising inequalities, by climate extreme and conflict, and even more, countries where these different shocks arrive at the same time and basically feed on each other to magnify their individual impact. So just for the sake of time, I want to actually move to this because to show, how when you look at these different driver and shock and you are looking at the level of hunger and how it has risen, but also some of the nutrition indicators, what we see is really that the countries that have the most difficulties to access finance today are the ones that have the highest level of hunger and actually also have seen a significant rise in hunger. And when we have this co-realization of shocks, that's where countries are in trouble. And that's where what we will do in the report, we really do this mapping about these different situations that country face and what better instruments can help to finance the solution. So when you are in country, particularly low-income country with a high level of risk, you are going to need to rely on grants. You are already very high level of debt. Unfortunately, we have more and more countries spending, for example, more in paying their interest debt that they spend on education or on nutrition program, or actually when even education, health, and nutrition put together. So they don't have this fiscal space. And so we need the international community, but we need to use the money sometime in a smarter way, including through de-risking instruments, because there are countries with high risk. When in particular middle-income countries where you have a larger tax base, you can mobilize more domestic resources, and you can also be more attractive to go on the capital markets. And that's where also you can use instruments like food security bonds, even they are very nascent as instrument. There are some good possibility here because we should not forget that investing in food security and nutrition is investing in the future of people. Well-fed people are more productive people on the medium and long run. But also political stability comes with food security. So really, you can show investors that if countries and governments spend more on that, this is a reasonable choice because you are basically putting your money on more stable and winning horses. And then you have countries that have actually a very high level of access to finance. And that's where the private sector is going to play a role. And that's where they can also accelerate funding by de-risking instruments. Now, and I will be concluding on two things. First, as I've said initially, we have a problem of fragmentation. We do a lot of small things, basically with high transaction cost and a lack of coordination and proper targeting. So we are already wasting some of the effort. So we really need to reorganize our financial structure to be more efficient, to finance at scale, and also to make the economies of scale we want when we deploy some financial solution. And also that we do proper risk pooling through portfolio of projects and countries when donors allocate their ODA money, but also through global markets where the private actors see how things are moving in the right direction. Now, I'm just going to have one last sentence. As I've said, even when we use the high-level definition and we look at the grants coming from ODA, taking into account both the money that high-income countries are spending through ODA on the core and extended definition, we can get this high-level number of $72 billion a year. So it's more than sometimes what you will see the G7 reporting. But $72 billion a year is 0.07% of the world GDP. So when we create $100 of wealth on the planet, the global solidarity to end food security and malnutrition, it's 7 cents. It's not a lot to deliver on the promises to deliver on this key human rights that is good food for all today and tomorrow. Thank you.
Great. Thank you. Thank you so much, David. And it's a truly fascinating and extremely comprehensive report. So, I mean, congratulations to you and the whole team that put this together, I think, at a very timely moment. I want to open up to questions from everybody, but while people are building their confidence to stick up their hand or write a question in the box, David, what was the thing that surprised you most in pulling all this together for this report?
So I will say, actually, already the role of international private financial flows that can contribute to food security and nutrition. Because only with partial mapping, we see that it's pretty important. So, how we find a way to catalyze public spending to better redirect these private flows will be important. Mm-hmm. Now, the second point is still, the level of mismatch we see sometime before where we spend the money and where we should spend the money, especially in these countries that are facing a lot of risk. And neither, unfortunately, the private and the public actors want really to go there to do the structural investment when the public actors go there when it's about humanitarian spendings. And basically, there is a bit of suboptimal use of taxpayer money, I would say.
And what are you most optimistic about in terms of having trawled through all of this data and looked at the whole story?
So I think now, obviously, we have also more data. I think we are cleaning this conceptualization issue that donors have an appetite for, this coordination happening. And of course, the Global Donor Platform is one example of it. Yeah. That across agencies, this question of finance is well identified. And people also start to connect two important aspects is, on one hand, the climate world and the climate finance, and the agriculture and the food security one. So today also we know that there's just 4% of the climate finance that go to agriculture and just a bit more going to food systems. So that's where we can accelerate because people start to see the connection of the dots. And also people connect food insecurity and conflict. And at one point you can see that or you have to spend much more money on guns, and if you do a bit things earlier, you can spend a bit more money on farms, and you can save more money on guns.
Great, thanks so much, David. Okay, let's open up to some questions, and feel free to sort of pose some challenging questions to David. So I can't see any hands up yet or questions in the chat, but maybe we just need to give people a moment to think and come up with some. Great, Chris, welcome. Maybe just say who you are and where you're from and pose your question.
Thank you, Jim. And hi, David. Nice to see you and thanks for the presentation. My question was just looking at sort of the expenditure that low-income countries in particular make on food imports. And whether you've done any analysis on sort of FX spend, which goes on that versus what, how else it could be used for investment, without disparaging economists at all. I often hear arguments that these countries should basically just trade their way out of food insecurity, which often seems to ignore the fact that FX is in short supply, and if it's used on imports, it can't be used for productive investments. So I'm just wondering whether you or have done any further analysis on sort of that question and case, both looking at how much is spent, but also how it could be used differently and sort of case for doing that.
So that's a great question. Now, let me start. So I am an economist, so you might not be surprised by some of the things I'm going to say. But first, I mean, trade is part of the food security strategy of many countries and will continue to be. I mean, all countries are not born equal in terms of amount of land, in terms of amount of water, in terms of growing season, and of course, of density of population. Now, I also want to point that it's not like if people are spending money on import bill like they spend money on investment. It's very two different nature. Basically, when you buy food on world markets, it's because your food on world markets is less expensive than on your domestic market if you manage a public procurement program. Or otherwise, even in a country like Yemen, half of the imports are done by private actors, not by governments. And for the country, you can have a problem of having access to hard currency. So you have a current account problem and potentially a capital account problem. But it's not like the money is in the pocket of the government and it's spent on import versus on a structural investment. Now, what is clear is that today we are, so we don't have always a fair competition on global market first, but we don't have this investment on the structural and the productivity sector, the productive sectors of some in particular low-income countries that have really an agricultural potential. So with bit of advantages, of bit of investment, they will seize the opportunity of having real comparative advances in agriculture because they have the right climate, they have the right natural resources, and they still have a cheap labor. And so that I will say, we don't want just to say, okay, people are spending money on import, it's bad. The question is where it can make sense actually to spend more on the productivity sectors to value the assets that people have and where there is a lot of opportunities, but that will make also economic sense and will be a source of creation of value for the farmers and for the wood economy, and not just, import are bad. But I will say that, yes, but at the end, is how we increase productivity, how we make sure that farmer can seize opportunities, and the trade should be a consequence and not a policy target per se.
Great, thanks, David. So that's quite a complicated story about how we get investments and foreign exchange and so on worked in. So I'm not so, Chris, has that answered your question for you? It sounds like this is a topic we could probably spend the whole afternoon talking about on its own.
Yeah, thank you, David. Yeah, I mean, I agree. I think it's often about a sort of static analysis versus sort of thinking about where you can get to with some productive investments. And clearly, trade is always going to be part of the mix. But it's often thinking about how can you, with some investment, as you say, many of these countries could produce food cheaper than they are now.
Yeah,
thanks.
Great. Thanks, Chris. I can see another hand up, but I do have another question here on the chat. David, anything to say about debt swaps for food security? And are there any sort of concrete examples going beyond just the conceptual idea?
So right now they are very marginal. I mean that in the report you will see that we talk about $40 million here and there. And the main issue we see in talking with countries and actors on debt swap is people doesn't want to do debt swap for low-income countries or highly indebted countries. So right now, most of the tool we see and used, and it's really much more on the climate front or on the nature front, are targeting middle-income countries on which basically restructuring debt makes sense, but don't want to go to the most vulnerable part. So I will say yes. Now it's also still very nascent, but it's not going to be the solution for all the countries we are on the table. But there is initiative taking place in Kenya. There is a few other things, but we are still at the experimentation stage.
And how big is the opportunity? Do you see a big opportunity in this space, David? Or
so I mean, I will say yes, but once again, for some countries, and as long as we really see why investing in food security and nutrition basically makes sense for the long-term growth of the countries. And we have very strong argument. We see how nutrition impact actually your GDP and the food security also. So that's, in some cases, that's even make more sense than on what we do, for example, on debt swap for climate. That is more about, the North making, in quote, a gift to some low-income countries to basically capture carbon that the North cannot do, but doesn't really benefit the economy of the country that they're investing in, when fundamentally for food security and nutrition, you restructure a debt And at the same time, you know that the country is going to have more capacity to reimburse in the future. So it's a good story, but we have to make it real.
Thanks, Dave. Okay, we're going to move to the panel discussion in a moment, but I can just take a couple more questions. Edson, I can see you have your hand up.
Okay, yeah, thank you very much for the presentation. A quick question. I'm from the African Development Bank. Just wanted to get your views on the trend of financing, looking at the public sector. I know that way back 10, 15 years ago, there was a recommendation for ODA percentage. I believe it was 0.7%, etc. And of course, the AU had the 10% to agriculture. But now I saw from the percentage in Africa of people who are undernourished, it's been like 20% for the last 10, 15 years, and actually it was in the red. So it doesn't seem to be, there doesn't seem to be a change over the past 10, 20 years or so. Can you say something about the trend of financing, given all those recommendations on ODA, on 10%, etc.? I know this is mostly on the public sector side. I know on the private it might be different, but yeah, just a word from you on the trend of those two sources of financing. Thank you.
Oh, thanks a lot. I will say, as you said, with the CADEP and the Malabo agenda, we had this target of 10% that African governments should spend in agriculture. And the global community actually since the 70s has said, we should spend 0.7% on foreign aid. Now, policymakers have not delivered on these targets. So at the end, if we are not on track with the goals, we should also accept this because we didn't align the means with the goal. So you have some countries, including OECD countries, that have reached this 0.7. A few European countries have done it. So it means that you can do it. And once again, it's a relative terms, We just we don't ask the same amount of money from two European countries that have very different size or very different level of development. We just say relatively, you should do the same effort. And we are not there. And so that's, a big issue for ODA. And what we want to say is, yes, countries should go to this target, but when they actually spend more on ODA, they should do it in a way that really target the food security and nutrition aspect, and more generally agri-food system, because there is so multiple wins, When you do this, you don't just deliver on SDG 2, actually. You deliver on SDG 2, 1, 15, 17, and so on. So that's really the place where you can spend the money in a more holistic way. And domestic government also should spend more on these sectors. Now, for Africa, we have some countries also that have very close from this target. But in terms of the CADEP framework, it's 10% spend on agriculture, but we also have to think about social safety net, about other elements that are not in this target. But most African countries have made very limited progress, but also the 10% of their public spending is still limited. Their fiscal space is limited. And today we have this high level of debt. And that's not by asking them to take more debt to feed their population that we are going to solve this problem. So that's where, we need to restructure some of the debt. We should be canceling some of the debt with the right instruments and put this country on track to be able to do the right investment. And just to, you have seen on my graph how things have jumped with COVID. So we are in a situation today where we still have more people in hunger, in particular in Africa, and we have left COVID with higher level of debt, and actually more also inequalities within and across countries. So that's what needs to be solved if we want to move forward.
Great. Look, thank you, David. I think we should, watching time, I think we should probably move on to the panel discussion, but we will give you a chance to sort of jump in again a little bit more after you've heard some of the reactions from the panel. And again, to our audience, do please throw some questions into the chat if you would like to, and further on in the session, also we'll look for some more comments and hands up. So we have a very diverse and extremely interesting and experienced panel to take this discussion further. We have the Honourable Neema Lugangira, who's a Member of Parliament for the Tanzania and board member of the Global Parliamentary Network of the World Bank and IMF, and a member of the Executive Committee of the UN Scaling Up Nutrition Movement. I think, Nima, you've been having a few network problems, but very glad that you can now join us. So welcome. We have Atiya Warris, who's Professor of Fiscal Law at the Faculty of Law in the University of Nairobi in Kenya and a UN independent expert on foreign debt and human rights. We have Ashani Pereira, who is the co-founder and director of programs at the Shamba Centre for Food and Climate. Agnes Johan, who is head of blended finance at Rabo Partnerships, and Bruce Campbell, who is a senior policy advisor and food systems focal point for the Federal Department of Foreign Affairs for the Swiss AG of Development Cooperation. So welcome to all of our panelists. Thanks so much for joining us this afternoon. I think David has sort of set up a fairly challenging set of issues for us to talk with. But I thought what we'd do first is just go around each of our panelists and get you to give us one big idea you have for making a difference. I mean, what's the one big idea you have that you think could take us to the sort of the light at the end of the tunnel, so to speak? So we'll start off with that, and then I'll go around and maybe ask you some specific questions related to your area of expertise, and we'll try and make this as much a discussion as we can. So feel free to jump into what you're hearing the other panelists say. So why don't just, so who would like to jump off? What's your big idea for making a difference? Nima, I can see you've got a big smile there for us, so you've probably got a good idea. Let's hear from you, and you'll need to unmute yourself.
Oh my days, you've put me on the spot there. So first of all, thank you very much for the opportunity to be here. I believe you can all hear me.
Yes, we can very well. Thank you.
So first of all, thank you very much for the opportunity to be here. I'm very pleased and honored to be part of this important discussion. My big idea is that as a member of parliament, and we're talking about ways in which we can increase investment, I think it is to get to the point where my fellow colleagues as parliamentarians, we have a clear understanding on the importance of food security and nutrition security and how it impacts, our constituents and the cost, the amount of money that is currently being used to cater for things related to malnutrition. And if we had no malnutrition, that money could go to other things, other developmental issues, which are also critical. So I think if we can get to that point, then it means as members of parliament, we are going to be able to advocate and push for the prioritization of domestic financing towards nutrition interventions. So that's my big idea. And I hope that we can find ways in which we can collaborate to bring members of parliament more on this discussion, but also to task us with that role. Thank you.
Great, thanks, Nima. And I think that's a really important point. So much of this is obviously around shifting mindsets. And I think what I'm hearing you say is you have to get parliamentarians to understand that this actually is a really good investment, and will give them a good return on that investment. Who'd like to jump in next?
I will jump in if that's okay.
Great, thank you, Atiya.
So my big idea is for the creation of a global fiscal institution that brings together not just the different and very diverse forms of financing, but links it to the raising and maintenance of living standards. And it's been my big idea for many years. So I'm very happy to be able to say it out loud in a very public space. And the reason is there's so many silos. I mean, today I'm speaking here in the food spaces on finance. 2 days ago, I was speaking climate finance spaces. A little while ago, we were all speaking in pandemic and COVID finance spaces. And for me, the biggest challenge in the space is debt agreements, for example, are in a private domain. There's no debtors club. So nobody can even compare, what are the like member states and all the rest. They cannot talk to each other. There's no dispute resolution mechanism when there are problems. So there's this whole financial architecture, and already David spoke about the fact that food debt swaps are really not featuring because it's about priorities. And it's priorities of those that have the money rather than priorities of those that need the money or need improvement in living standards. So that would be my big idea.
Right. That sounds fascinating. I think we'll need to come back and get you to lay that out in a little bit more detail as we go through the conversation. Ashani, would you like to jump in there? I'm just sort of going across the bottom of the screen now.
Yes, indeed. So the big question I want to put forward is, I take the cue from David on the structural underlying causes that need to be addressed. And I take Nima, your point on the domestic investors. And the question is this: are there fundamental structural changes that are preventing domestic investors from investing in food security and nutrition? I think there are. And I'm looking forward to unpacking that in the discussion to follow.
So just Ashani, just to clarify for people, when you say big structural constraints, what do you mean by that? And let me put you on the spot. What's the answer to solving those? One idea.
The answer to solving it is this. When we look at how central banks in developing countries work, they ask their domestic banks to have very, very, very high buffers when they make a loan. They're much higher than international standards. They're much higher than financial standards, and they're higher than banking standards. This creates a cash crunch in domestic financial markets. And banks tend to hide behind that cash crunch. And they don't enter the space. And unless developing countries co-finance alongside donors, we'll always have a mismatch. We'll always want developing countries to have skin in the game. And unless they do, we're going to have this conversation for a very long time.
Thank you, Ashani. Well, and another fascinating point for us to come back to. Agnes.
Yeah, because I'm tapping into the banking conversation here. So I'm working at Rabo Partnership. So we work a lot with local emerging market banks, right? So we try to really increase their appetite also to enter into the food and agri space. Now, why the question was, what is my big idea? So I think a lot of parts of the agri value chain are okay to finance, right? It's a knowledge-based thing. You need to get comfortable with logistics, right? The food security problem is also partly related to logistic challenges in the food and agri value chain. The real challenge lies with the smallest farmers. And their access to finance is very limited because it's a very high risk. They will not be able to provide collateral to private banks. So that's super complicated. But if you look at where the food production can potentially be increased, right? Because we want to be a food system transition. So it's using the resources efficiently. Do not open up too much new land, make sure we can actually feed the world sustainably. You need to focus on that part of the value chain that has the least productivity. And to me, those are the smallest farmers. They're the hardest to reach. Like I said, high risk, super high interest if people go there. But I think your part of the solution are the local banks, because they have the retail proposition, the local outreach, they have the potential to go out there and finance these farmers. Now, I think the model so far has been, you go to your office or your agent, and that's very expensive. But with the digital innovations coming in, you can use different types of data. You can use different type of, data flows that are out there. You can use them for credit scoring. You can use them to combine efforts in servicing these farmers if you could share the data. Now, that's where public, private, all kinds of things come together, because you have to have proper legislation that allows you to use the data. You have to have some kind of risk sharing for these banks to move into this high risk segment, but not everything, right? You can actually leverage that ODA funding that's only limited available. So that's my big idea, that we should develop digitalized financial solutions with local commercial banks together.
Great, thanks. So it's sort of an IT-driven sort of revolution of the way you can easily access finance for small-scale operators in the system.
Yeah.
Super interesting point. So Bruce, what's your bigger idea how donors are going to get their act together and help solve these problems?
I'm not sure if I have a big idea, but I do have a big question, and that is, do we have the courage? Do we have the courage to ask the difficult questions? We have a report, SOFI, again, not happy reading, and through here, like GDPRD, but also other four as well, we do have spaces to ask these questions. Do we have the courage to use them? That's the question I'm asking here. As we all know, there are certain taboos in our line of work. There are maybe some hard truths out there we don't really want to countenance. And so there are some things we'd rather not ask, but in a way that really hinders us at, laying out where the constraints are, where the limits are, really tracking down the structural constraints that Shani mentioned beforehand, and articulating them, because it's only when we start asking the hard questions and being ready not just to stick our fingers in our ears when the hard answers come, that we can really start driving at possible solutions. And there'll be some fields I think will say, well, maybe we can't do it, or at least not this way. And so I look forward to how we can, not just today, but quite generally continue to explore that space.
So what's the most difficult question you'd like to ask and make yourself thoroughly unpopular, Bruce?
Okay, totally unscripted. Do we really have the means to bring about the change that we hope? The means in terms of time, the means in terms of natural resources, the means in terms of financial resources, and ultimately the means in terms of what we are as humans. These are very difficult questions. I don't think we can lay them all out today, but having them at least in the back of our mind can at least keep us critical towards what we're doing.
Okay, which I think sort of comes back to what Mattia was saying of needing some sort of fundamentally different structure to make the means possible. Look, let me come back to you, Nima. Once you've got all of your parliamentarians on board and supporting the idea that we need to do something, what do you think are some of the main things that national governments could be doing around trying to create a more enabling environment? And what could they perhaps be doing to make possible the sort of better financing system that Agnes was talking about?
Thank you very much. I think I can use Tanzania as a case in point. First of all, I think it's very important that we find ways to create that political will, from national level. And we in Tanzania are very fortunate that our president, Her Excellency President Dr. Samia Suluhu Hassan, is very much committed to agriculture and is pro-agriculture. So one of the things that we've done in the first time of the history of Tanzania, during this parliament, this 12th parliament, the agriculture budget has tripled. Mm-hmm. And that has been as a result of the consistent advocacy for increased domestic financing for the agriculture sector. We started from the first year in parliament, second year in parliament, third year in parliament, the budget tripled. So that goes in line. Yes, you need, on one hand, the political will on the government side, but you need that understanding and that robustness from the members of parliament. So that's one of the things that can be done, the collaboration. But of course, for members of parliament to get to that point, there's a lot of capacity building, engagement, collaborations with organizations such as yourselves, the FAO, IFAD, etc., to try and get this, to try and get us to where we ought to be. So that's number one. But number two, again, taking an example from Tanzania, is that throughout this process, I think it's important for governments to make deliberate decisions and to find out or map out what areas in the agricultural sector are needed development. So for the case of Tanzania, we prioritize extension officers, because we know in order to have a robust agricultural sector, to strengthen the food security and nutrition security, farmers, particularly smallholder farmers, need extension services. But extension officers need to be able to provide those services. Mm-hmm. So what the government did is that right now in Tanzania, extension officers all have extension service kits and motorbikes to be able to commute and reach those farms. So that was the first one. Second thing is irrigation projects. And very quickly, when you're talking about irrigation projects, it's linking with the Ministry of Agriculture and Ministry of Water, and making sure that these, in the different farm places, you'll be able to have the right access to water. And just to sum up, we had the first agriculture sector development program. The first phase ended, and we're now in the second phase. But alongside that is solely the agriculture sector. But alongside that, we have the National Multi-Sector Nutrition Action Plan, which is multi-sector and brings together more than 8 ministries. So that goes to show when you're dealing with food security, it might be, the agriculture ministry, maybe trade, but when you link into nutrition, you also have to look at other sectors. Now, there was a point that was raised about the 10%. I know all our governments have committed to the Malabo 10% of the budget to go to the agriculture sector. But one of the things that I always like to challenge, government folks to also do is, can we also map out, other than the percentage of the budget that directly goes to the agriculture sector, can we also map out the percentage of budget that goes to other sector ministries that has a direct impact on the agriculture sector, like water, land, trade, etc. Yeah. Finally, I can touch on the issue of debt swap. Yeah. I think debt swap is a critical area, especially for countries, developing countries such as ours. And I know the world is more inclined towards the debt swap for climate, but we also have to recognize that even the matters of climate have an impact on food, have an impact on nutrition. So it's important to find ways in which the debt swap package can include all of these moving blocks. I think for now, I can end there, because being a member of parliament, I can talk forever, and you're going to tell me, I don't want you, Jim, to tell me, okay, time is up. So let me end here for now, and we can take more later on. Thank you.
I think we could probably have a 2-hour conversation with any one of you on this panel this afternoon, but that's great. I mean, what I'm hearing from you is a couple of really important things, I think. I mean, firstly, you basically said you've got to shift the mindsets and get the political will. You basically talked about putting the basics in place. If you don't have extension staff with motorbikes to get around and actually do their job, you're not going to get there. But then I think also very importantly, talking about how critical it is to have effective mechanisms for coordination across all the different players involved. But I think we can also come back to a little bit about the enabling environment in terms of finance, perhaps when we come back to you, Agnes, in a few moments. But Atiya, we wanted to ask you a little bit what you think about the challenge that David presented to us around the biggest food security problems being in the countries that are least able to afford something. So, maybe also coming back to your big idea, how does your big idea help to solve this problem of the biggest problems being in those countries that are least able to afford investments in food security?
So, I mean, I agree with you. Each of us could go on forever. So I'm going to try and be very succinct. And I'm going to give you an example so that you see the reality on the ground when it comes to debt in low-income countries. The world came together, or tried to come together, through the OECD to set up what they call the BEPS process, which is basically erosion and profit shifting, where they were trying to come to some kind of agreement on tax. But there isn't a single low-income country involved in that. So they brought together 130 plus countries, but the whole gamut of low income are not in the conversation. And then I go into countries like Angola, where I was recently. And you have a scenario where, emerging from a war, they are now having incredible social services demands because they have a birth rate of 1 million children a year. 1 million children. I mean, it's mind-blowing. And they take on debt, but because they have oil revenue, they don't get too much access to concessional financing. And then on the other hand, if I jump you across to the Bahamas, which is a high income country, despite repeated cyclones where they're losing infrastructure that they built using debt, they are still paying off infrastructure, but the infrastructure is under the sea. Mm-hmm. And they are not accessible to concessional financing because they're a high income country. And so you have this scenario of these multiple crises, which affect food, which affect health and education, hitting countries across the world. And if you look at the low-income countries, they cannot leverage. So how does the system work when you want to take on the debt? Well, if you were good at paying off your debt, then you're a good risk for an investor at an international level, which means that your interest rate goes up because it's a high demand loan. And it becomes almost counterintuitive. But you can imagine countries like Angola that have been paying off their loans are being required or being asked to pay higher interest rates because they're good for it. But when you look at issues like food that we are talking about, these are not investment areas that predominantly are expected to be profitable. If you have free food programs, there is no profit. It's running at a loss if you're going to use financial corporate language. And so what you have is a scenario where the debt framework in place is actually one that is anticipating a kind of a profit that will then pay off the interest rate. The measure of the interest rate is based on how productive they expect that country to be. And the problem is that it cannot be measured that way, and it is inherently problematic. And so what David talked about is very fundamental. Germany, incidentally, had its debt cancelled after World War II, and an additional step to that was that the US, for the only time in its history, allowed American companies in Germany to pay its taxes in Germany. So not only did they cancel the debt, they facilitated the economic recovery by allowing a country to collect taxes. Now, if we come into the modern age in which we're in, we need to talk seriously about canceling debt. And I am reminded of Bruce's, his big question. And we have the financial means, but we are not coming face to face with the issues and dealing with them as they are. And we're continuing to put profitability in the center in a space where we actually are now looking at a very dire situation of death by hunger. Yeah. In Angola, a girl died after 4 days of no food. And this is while I was there. And we cannot be living in a world like this. And so for me, working in issues of debt and finance, that's why I need these to be brought together. I need that conversation on money to be very clearly targeted to the fact that we're looking for the money for a purpose. Yeah. And that purpose is actually not even quality of life right now. It's actually survival, which really works.
So I mean, what I'm hearing you say is that, we often think about we need to basically pour more money into the problems of food security. But what I'm hearing you say is actually you've got to think much more deeply about the underlying structures of finance to actually make this work in a way that creates the right incentives for the whole system to work much more effectively.
Yes, absolutely.
And how, I mean, just coming back to your big idea. So just refresh us on your big idea and give us one point on how your big idea helps to tackle this problem you're talking about.
So secrecy is one of the biggest challenges in the financial spaces. Contracts are in the private space. They're not in the public space. Citizens don't know what debt agreements exist, what terms their countries have signed on to. If you have a disagreement with the IMF, for example, on a loan, then the IMF has to agree to let you go through their ombudsman process, for example. But if they decline to take on a resolution in the space, then there will be no resolution. Zambia is one example. They couldn't bring all the debtors into the same space to come to an agreement to change the terms of the repayment schedule. So for me, it is the fact that there is an absence of a space to resolve disputes when they exist. There is an absence of a single space to assess what that interest rate is that a country should pay, if at all. Because I think for development issues on raising living standards like food, I don't think there should be interest rates on loans of this nature, frankly. There also has to be a place where we talk about if a country pays its debt off, then why is its credit rating being lowered and not raised? Because this is also happening. And again, there are no regulations or laws on credit rating agencies as well. It's 4 companies in one country in the world. So all of this is what I think the word in the report I kept seeing was fragmented, and it's exactly that. It's a very fragmented system part of which is in the private spaces. And we need to bring it together and make it coherent for the world.
Okay. So I'll bring that one back to you a little bit later, Bruce. But is there things that the donor community can do to help with the fragmentation if they don't have big buckets of money to pour into all of this? But Agnes, let me come to you for a moment on the private sector. And I think sometimes in this whole discussion, this is sort of idea that there's a big bucket of money at the end of the sort of rainbow of the private sector. Where do you see the private sector fitting into this whole story? What's realistic? What can it do? What can't it do? Where are opportunities being lost? And what are some of the realism we need to bring into this, which I think is sort of very much connected to your specialty around blended finance?
Yeah, it's a good question, right? So the private sector, if you talk private banks, let's move into that space then. It's not an unlimited amount of money, right? So these banks will always look at projects to be financed to see, okay, do I actually get my money back? And preferably, do I get my money back and can I make a return on it? Because that's what I promise to my stakeholders, to my investors, to my people who put their savings on these banks. So there's a reason why banks are so conservative. I agree, we can be a little bit more flexible, but there's a rationale behind it. So I'm heading blended finance. So I'm trying to bring together the public and the private sector, right? To work together to see, okay, can we use the limited amount of concessional funding that is available in the world efficiently, and we create leverage. And that means that, so if you use, say, 10% of risk sharing, the 90% that is needed can be funded with private sector money. This way you can actually unlock and mobilize a lot of funding. That works, but it's very hard work, I have to say. So I've been in this space for the last 6 years. We didn't have anything like that at Rabobank. So I'm working at the Dutch bank. And then you see, it's also very practical things like you don't speak the same language. Just if we talk ESG for a bank is different than ESG for donors. Then if you have multiple donors around the table, they all have different KPIs. So there's not an alignment in saying, okay, this is what we want to achieve. But if every donor puts his own impact-driven KPIs on top, it's a layering, right? So that means that, for example, you want to run a program on degraded land renovation, but then before you know it, there's a very big gender angle to it. I mean, I'm just exaggerating here, right? But then if you talk farmers, in Brazil, where I work a lot, for example, then we can't really select female farmers there, right? It's farmers in general, it's degraded land. That's the problem that we're trying to solve. So that makes it sometimes hard. And I think time is also a different concept in the private sector compared to the public sector, because you have annual rounds of budgets, and sometimes if we talk to the big funds like GCF, an accreditation process takes 1.5 years. That's not necessarily how private sector operates. So that makes it sometimes hard. But I do say, even though it's hard, we all have to put in the effort, because the problem is so big that if you don't collaborate, we'll never get there. Mm-hmm. But it does require a bit of trust building, maybe also creating understanding who comes from which side, why do you look at things the way you look at things. So I think it's important, but it's a bumpy road sometimes.
So what's your best example of blended finance that keeps you motivated to keep working on all of this?
Yeah, so as Rabo, we are very big in food and agri. And then we said, okay, the deforestation is really a big challenge, right? So we joined, we went into a partnership with UNEP, and out of that we set up a blended finance vehicle called Agri3. And the fund is set up to work with all kinds of commercial banks, not just with Rabo, to provide risk sharing into transactions that are too high, too long tenor, to something doesn't fit into the appetite. What really encouraged me was that our Ministry of Foreign Affairs basically crossed that hurdle to actually really collaborate with the private sector initiative, because they said, well, why should we put taxpayers' money into this vehicle if it's about large-scale farmers, if it's about commercial entities? Why would we? But they saw the big potential and also the climate impact that it could potentially generate. So then and it works. It's been it's set up in 2022. It was finally alive, and we've disbursed I think the fund dispersed over 90 million, but in total it actually mobilized 275 million euros so far in emerging markets. Yeah,
okay.
I'm pleased to see. So it happens.
a nice example of linking across private sector bank, UN agency, and a bilateral donor to make something like that happen.
Yeah.
With a lot of hard work on your side, by the sound of it, but
all parties. Then I think there's a multi-stakeholder thing.
Ashani, let's come back to you now, and maybe some reflections on what you're hearing from the others, and in particular, are we sort of struggling a little bit that we have a whole bunch of people that are in the food security, agriculture, nutrition space, but we're hearing so much here about all the challenges of finance. So do we actually have a fundamental mismatch between the sort of understanding and capabilities we need about finance and what's going on in terms of the food security domain?
I don't think there is much of a mismatch, Jim and all. I think there are structural barriers that is preventing the flow of money, in as much as there are understanding barriers that Agnes talked about. So if we zoom out, we have a mood for risk-taking. We have donor governments giving special privileges to their DFIs to go out and take more risks, and they're giving the DFIs, the development finance organizations, money to go out and take more risks. Similarly, the donor governments, who are also shareholders of the World Bank Group, for example, right, have given the World Bank the ability to change some of their governance rules and their prudential regulations to take more risks. So the World Bank says the reforms to date is helping them leverage up to 50 billion over 10 years. But David told us that we need practically 90 billion a year. There's a long way to go. Then in the spring, there was a new bond announced by the World Bank and a new guarantee program that they say will leverage a couple more billions. So yes, donors are stepping up to the table. They are ready. They accept more risk has to be taken. The issue that is not talked about is that developing countries also have to improve their governance frameworks to meet donors and DFIs halfway and accept the responsibility for development. On debt swaps, I totally agree with Tia and David. But the issue is that developing countries are now, their bonds are held by private creditors. When you look at a swap, the negotiation with private creditors isn't as easy as with donors, and private creditors want more bang for the buck. If they're going to take a haircut, meaning they're going to accept a loss, they want something in return. And the question is, do our developing countries have the ability to administer the money that comes from a swap and deliver on food security? Mm-hmm. That is a big question. What donors continue to ask is for additionality. That is unnegotiable. I'm being provocative, as you asked, Jim.
So what's the big structural change in your view that is needed then? And just before you answer that, I'm just going to flag that David has to leave us at 4:30, I think. So I'm going to ask David to jump back in a moment and give us a little bit of a reaction to what he's heard, and maybe ask a few more provocative questions for us to continue with once he leaves. But let me just come back to you first, Ashani. What are a couple of the really big structural changes that you think are needed to improve this whole finance mechanism?
I go to Agnes's point on the importance of domestic commercial banks. Their participation is absolutely critical. And I think, other than for the lack of knowledge and the lack of appetite, there is a problem because they are governed in a way that doesn't allow them to do what Agnes is doing. It doesn't allow that level of flexibility. And that is something that donor governments can address, because the central banks of donor governments have come forward over the last 3 years to say climate, nature, and hunger are material risks, meaning that they affect the macroeconomic stability of the country, right? So there's one big pillar. Then in countries like Angola, here I put it on the table, I just pick it up. There are nascent sovereign wealth funds, right? And these sovereign wealth funds are investing in Saudi Arabia. So maybe we need to bring in the sovereign wealth funds into the debate. And the last idea is donors are asking for additionality. Should we focus more on outcome payments? Will this bring the mindset change and the political will to the table?
Great,
David.
thank you, Shani. And Bruce, I'll give David a go so he can then jump out when he needs to. But then I also want to come back to you to talk about all of this from a donor perspective. But David, I mean, listening to all of this, are the answers here in terms of finding that 7 cents in $100 that you said we need to solve the problem?
We need more, because right now that's what we spent. So I will say we need a bit. We need a bit more. But no, so I think the discussion was very rich and interesting. What you have heard also is there is some concrete pathway that can be adapted to different contexts. Now there is a few roadblocks that have to be tackled. But also I think we need political will on some of this. You see both domestically, internationally, how serious we want to be about food security and nutrition. And we have to make the case for it. Because overall, the world has never been richer than it is today. So we have to acknowledge it. And so it means that it's not like if money is not around, we just need to redirect it. We also have to acknowledge that for a number of high-income countries right now, the level also of public debt and public tax mean that they are not going to spend much more money on international aid. So it's how it has to be well directed. And I think to make the case also to taxpayer and to the Ministry of Finance that investing in food security and nutrition is something that makes a lot of sense from an economic point of view. And when you do debt restructuring, that should be also a priority. There's a lot of discussion on climate, but as I've said before, climate is important, but in some case, it's also the climate situation is largely due to what high-income countries and upper middle-income countries have done in the past. So, negotiating a climate deal with low-income countries that was not been part of the problem and say, we are going to make you a debt concession if you spend money on climate-related activities. In terms of fairness, we can rethink that. Food security and nutrition is different, That's something we can say, it's good for you, it's good for the world, let's do it. So that's what I will just stop here. And obviously, we want to hear again from some of the panelist members that have a good ideas. But I think, this question, and that will be my key message, this question of contextualization. Yes, we need to de-risk. That's a key concept. But how we do it is going to be context specific. There's not just one innovation that gets us out of that.
Yeah. So David, just a last question then. We mentioned at the beginning of this session from Maurizio that we're moving into the Development Finance Conference next year. What do you think's needed to have a very practical set of proposals and strategies to tackle this issue for the Development Finance Conference next year? And how close or far away do you think we are from that?
So there is a serious risk that agri-food system, agriculture, food security, nutrition are a bit forgotten. I mean, at FAO, we have worked over the last few years on even the annual report on finance for development. And before we start to be much more involved, there was not even a chapter or not even a paragraph on dealing with that. A lot in infrastructure, a lot on traditional spending. So we have really to show that we need to spend money on these sectors, on these activities, and that will deliver on many of the SDGs. Now, and just to be honest, we are dealing with a complicated story. Agri-food systems are much more complicated than energy system or health systems, and they are risky. And sometimes they are messy because we have very different actors of different size. But that's where the potential here, and we cannot just avoid to deal with a problem because it's complicated.
Great, thank you so much, David. And I know that you've got to run off to a high-level meeting, or shall I say another high-level meeting, but but thank you so much for joining us. It was a very, very good presentation. You've raised a lot of issues for us, and we really appreciate your time to join us this afternoon. So good luck with your next round of meetings, and we'll obviously be hearing a lot more of you over the next period as we move to a range of other events. So thank you.
Thanks a lot, Jim, and thanks everyone.
Yeah. Bruce, let me come back to you from the donor side now. I mean, there's plenty of ammunition there for what donors could be thinking about and doing. What's your sort of sense of where we're getting to in this conversation about the implications for bilateral donors?
Yeah, I mean, in terms of the SOFI report, yeah, there's certainly a lot to think about, especially when we look at the data. And thanks again to David for the presentation, that we're really struggling to get traction in many countries. I mean, one really important takeaway, reading the report, but also from this discussion, is that it's important not just to think of SDG 2 in isolation on its own, but always in combination with SDG 12. I mean, that is sustainable consumption and production. And if you look at the implementation part of the CFS voluntary guidelines for food systems and nutrition, you'll see that the two are actually mentioned together, and I think that for good reason. And I mean, in other words, if we were just to say, right, come on, let's laser focus on SDG 2 by 2030, to really lunge at it, maybe you could get reasonably far, but then you might suddenly discover that you're kind of sawing off the branch you're sitting on. If we don't include the question of environmental sustainability. I mean, that's an easy question or thing to say, but it's a difficult question to ask if people are hungry at the same time. But in other words, if we draw down our resources while achieving zero hunger, we might suddenly see this bounce back that we already have seen a few years ago. So we're not prepared to take the sustainability angle into account in basically everything that we do for working towards zero hunger. We might suddenly see our whole bases crumble thereafter. That's my major concern there. So we should be asking this question through every single investment we do. And this, of course, takes us to the question of, okay, we have to take a systemic approach to everything we do. And this is where the problems begin. That's not something that all food system participants are good at. And this is a challenge we have to consider at the private sector point as well. So if we include, and I think these are the drivers mentioned before, question of environmental sustainability in the angle of investment decisions, then these are the things that usually cost money in the short term, but they pay off only in the long term, which is not so appealing from an investor point of view. And if we look at the 2030 deadline, this is already becoming a kind of a short-term horizon. So we have to work hard to bring the two together. And so we also have to think about, in some form, of what the SDGs will look like beyond 2030. So the private sector, but to the donor community, we're kind of ticking different boxes, and the Venn diagram is, I think, in a natural sense, quite small. So we have to think how to enlarge that. So to get there, I mean, I'm thinking of Atia's underlying question of how finance works. Donors should really be focusing on, building pathways, thinking about how we open markets, clear out obstacles. I think David made an allusion to that beforehand. Obstacles imagined or actually real, in order to pave the way for actually large investments that can take place on their own without the kind of incentives we can offer. And donor coordination, things like pooling our own resources and establishing common standards. I think there's a good bit of work on that already happening in the blended finance working group at GDPRD. So I really look forward to see what's coming out there. And just to make sure we're talking the same language, we're not necessarily doing exact same things, but we are coordinating with one another just to make sure we're covering all the issues. And finally, innovation is important. We need to do innovation, but we also need to let programs run long enough to not just do proof of concept, but actually get across this early stage where it's all about environment, in just getting investments, return on capital, or whatever, to get into phase where we also get this environmental payoff into our investments. And so I think this is what we need to see more of, and it's not easy. So I'll stop there. Happy to continue that at a later point.
Great, thanks. Thanks, Bruce. And I think plenty of agenda for the donor platform there. But I think also you highlighted an important point that, for good reason, the SOFI report focused very explicitly on food security and nutrition. But I think you're also bringing us back to the bigger agenda that we're also looking at with the donor platform, is how do you link that back into a wider discussion around food systems? Mentioning, of course, the importance of considering the environmental dimension as well. Nima, are you still with us?
Yes.
Oh, great. Okay. So what I'd like to do is just sort of go back across our panel and just get some reactions from you about what you're hearing from your fellow panelists that really trigger your interest, and perhaps in the sense of, we just talked with David about the importance of keeping this agenda on the development finance conference next year. What would be maybe some things that you think should really be emphasized in that conference next year, and how would the case for all of this be made in the development finance context? So perhaps back to you, and then we'll go around the other panelists as well, just letting you jump in as you see fit.
Thank you very much. I was also going through the comments, and I see there's a comment from Edson talking about using digital tools to enhance access to finance, and he's put some homework for me, and I would like to put the challenge back to him. It's a little homework for him, and try and find ways to engage parliamentarians. I just wanted to put that back on him. Now, going back to the point, I think it's from what we've heard, it's clear that there is competition for financing, and there's different moving blocks, and all seem to be critical. But as FAO rep just mentioned, I think oftentimes the area of nutrition, food security seems to be forgotten. So a lot more effort is needed to kind of strategically position the importance, but also the impact that can be created if we pay attention to areas of malnutrition and food security. There's, when we're talking about food security, there's issues of food waste. African countries, we have a lot of food waste that also contributes to, in losses in investments. But we also have ways in which we can further enhance or that agriculture best practices. For example, why is it many African countries or the African continent food import bill is higher than its export bill? When we're talking about investment, we shouldn't just look at the investment through loans or through through developing financing or other types of financing mechanisms, but we can also look at investment by saving the current unnecessary expenditure. Why should we be having such a huge import bill? It's because we export raw and we import finished food products. So there needs to be strategic investments also to making sure that we address these elements. If we invest in food production, in adding value to our agricultural produce, that will reduce the export bill. And when you reduce the continental export bill, it also reduces the issues of our currency, weakening our currency by looking for foreign currency. We have the Africa Continental Free Trade Agreement, which is a big thing for also the agricultural sector. But how are we going to take advantage of that if we're still, even if we're exporting to another country raw, other than the local consumption, the rest will be exported raw. So I think we need to look at those structures, and perhaps those on this call can, together we can brainstorm on how best to do that. And as a concluding point, since we're talking about rural development, there it's even more critical to also look at the level of education, understanding, even when we have agricultural apps or even financing apps like the one that's mentioned, do the smallholder farmers in rural, or do the youth in the rural know how to use those apps? Do they have the digital skills? Do they have access to connectivity? Can they afford those smartphones? So those are all other elements that need to be taken into account. And then finally, issues of land. Being a woman, I have to speak for women. In Africa, 60% to 70% of the African population work in the agriculture sector, but out of that, 80% are women. There's still challenges of access to land for women. So that's another area I think that we need to look at. And I think let me end there for now. Thank you.
Great. But I think again, emphasizing the point that if we want to tackle the food security issues, we also have to come back to some of the broader, wider rural development food systems issues in a very integrated way, which also speaks to what you were talking about earlier about getting a multi-ministry engagement on these issues. Agnes, I've seen that you've been having a little bit of conversation on the sidelines here with Radio about a number of issues, and I've been sort of trying to moderate and not reading the detail, but maybe it would be good if you and perhaps Radio would like to just briefly mention what you're engaging with there.
Yeah, so I was trying to follow what happened on the chat while trying to listen to the panel. It was a bit complicated, but hold on, let me scroll up. So the question was, the big idea element, is there an element of subsidy from donors in absence of domestic fiscal space in this program for smallholder farmers needed to lower the cost of capital for agriculture and make it as profitable for local banks as for other sectors? Now, I think you always need some kind of shape or form, but if you say subsidy, it's like a grant, right? So you give it once and then it's kind of gone. But I would say the perceived risk of smallholder farmer finance, because we haven't got the data because nobody finances them, so it's still perceived risk is very high. So that means you can reduce that perceived risk by offering guarantees. So risk sharing elements, or funded or unfunded, depends on the context. I think the context is very important. You can have first loss type of guarantees, or bigger, or the other way around. FMO is a program where it's the other way around. I think that is going to be important, because if you reduce the overall risk profile of a certain portfolio, it means you can also reduce your interest rates, because the interest rates reflect the perceived risk of that particular portfolio. But I think the biggest challenge with these smaller farmers, and that's also addressed, but the land ownership or the land title, if that's such a big chunk. I saw the presentation. I mentioned that there was so much progress in Latin America. That's because in a lot of these countries, the land title is actually well arranged for, right? So if you go to a bank and you can give collateral, it just makes the whole lending easier. And I think, but that's such a big problem to tackle. But I think it's important to keep mentioning it, because it kind of, if we are stuck in the old-fashioned system, Katia wants to address that one, but as long as we still have it, we better start, try to make it work for us, right? Yeah.
So Agnes, from a private sector banking perspective, when you hear the messages that Ashani and Atia are giving about the need to tackle some of the deeper structural issues in the whole financial sector. I mean, how do you see those issues?
Yeah, that's complicated, right? As a single private sector party, how much do we actually have to say on these menace, right? And then people immediately start pointing at central banks wherever you are. It's a safe haven to hide behind, as Oshani rightly points out. Look, I am the private sector, right? So yes, we are really put under scrutiny by the central banks. All the fines that are given if you miss out on certain regulations, they're not, it's not nothing, right? So banks have become much more, reluctant to go into high risk sectors, into high risk elements, right? If your KYC is not fine, you be fined, right? So that's not easy. Whether we can actually change that as a private sector alone, it's a good question. I think if we combine the efforts and we all start advocating, but then look, I'll be, or my bank will be much more advocating at the European Central Bank. Whereas if you are in the African context, you should have that conversation with your central banks there. But that's not the easiest pathway, I think. But that's
Thank you. So
that's the honest version. Sorry.
lots of sort of thumbs and nodding heads there. How would you like to jump into this discussion at this point?
Me, yes.
Either of you.
Okay.
And then I want to open up to some more questions and discussion with the general audience for our last bit of time.
You're just dropping those structural changes because they are certainly areas where donor intervention and parliamentary intervention is necessary. But picking up a point from the chat, we tend to forget one important thing, and that's related to the prices of food, which remains stubbornly high in most developing countries. And that brings us down to the reality that if you're growing fruits and vegetables for a domestic market, you're particularly left out of the financial system, and it's very difficult to raise money. Whereas if you're growing tea and coffee, commodities, and green beans for export, and you're having a purchasing order in a foreign currency, then raising money becomes easier. And that brings us back to the point that to provide money for SMEs and farmers that will solve the food security problem, we need domestic financing in local currency. There's the mismatch, if there is one.
So okay, but I have to jump in here, right? So it's not just about that. There's also another layer. There's this whole international financial framework where you have what I call tax havens or secrecy jurisdictions. And when you look at how the companies that leverage cross-border trade work, then they embed costs. For example, I forget the word, patenting the development of a particular type of seed. So we have this whole debate in food where you can no longer actually produce your own food. On the other hand, you have indigenous communities actually fighting to protect what they're calling, I forget the word for it, the seeds that come from ancient times. But more and more you have this problem. And last year there was a meeting of heads of states in Senegal for Africa, where they talked about food security. And they were talking about the fact that the three main imports, or the three main staple food that Africans eat are all imports. And so there is that conversation that is so critical, that how did a whole continent end up being reliant on a nutritional food that doesn't grow on their continent? And so there are questions that are cultural here as well. But if I take you back to my financing space, which is the way companies structure themselves through their branches and how they pass goods on, there is a very famous case of Chiquita Bananas from Brazil, where the price of the banana leaving the farm was like, I think 10 cents to a bunch. And I mean the whole bunch, not the, what I call the light banana bunch. And it was £1 for the, 12 bananas by the time it lands in the UK. And the reality is, if it was 5 or 10 cents for cost, then we're talking about supernormal profits being embedded in spaces. And this is the whole global debate on illicit financial flows, on avoidance and evasion of taxes, on aggressive tax planning that is occupying a lot of the spaces I'm in. And this is in the food sector because I think there are only a couple of big food companies in the world. So there's this domestic production that we're talking about, subsidiaries, which I agree with Oshani, that how do you go from farm to fork in a domestic space, which is really important, and infrastructure needs to be developed for that. But then there's also this whole global conversation on the financial framework that is embedding false costs into the system.
Great, thanks. Look, let me ask anybody that would like to ask questions or make a comment to put your hands up. And maybe while I'm doing that, just coming back to you, Agnes, how can you be a responsible private sector actor when often there's a wider environment that is probably incentivizing not being quite so responsible?
Yeah, that's a good question. I was also contemplating the remark of Bruce before, right? On the long-term and the short-term viewpoints there. I tend to not necessarily agree. When we did the transactions in Brazil about degraded land renovation, you can do that in numerous ways. Is one way of putting just a whole lot of fertilizer on it, which is not so sustainable, which you can also renovate is slightly different. So we actually followed the extension services of the Brazilian government, following that, and then added the reforestation element to it because of the forest code. And there you actually see that our clients, which are big farmers, they really appreciate, one, the technical support, two, the fact that we're restoring it in a sustainable manner, because if you use less inputs in terms of pesticides, fertilizer, it actually reduces your production costs, right? So it is an interesting model. And the third thing is that you actually restore the top layer of your soil. And that's a long-term commitment. Now, most farmers sit on their land for a long term. It's not, you never farm for you farm for your kids, for the next generation, right? So that whole concept that, yes, farmers tend to go for the quick run, but if they see that now, oh yeah, my land's actually degrading, it's not going well, so that means my kids are not going to be able to use this land, there's a big willingness of them to commit into that part. And I think, and maybe it's the European view here, but sustainability becomes so much more part of our thinking. When I started blended finance at Rabobank, it was a bit of early days. But yeah, I'm not sure how familiar you are with the Dutch agricultural space, but we have a huge nitrogen problem. So we need to move our sectors into more extensive farming. That's for cattle, especially for the dairy side. It's a very painful process. But also there you see that we collaborate closely with the government. So we've put aside a big amount of money in a transition fund together with the government to actually facilitate that reduced productivity, which is a bit the reverse of what we're talking here for emerging markets, but to smoothen that transition as well. So yeah, I think the private sector is very well aware of the long-term effect of non-sustainable investments, and we're also being held accountable, right?
Yeah.
Yeah.
Thank you, Agnes. Do we have any questions or comments that anybody would like to make as we sort of move towards the end of this session? We've had such a fantastic panel that you've answered everybody's questions already. But I think there was another where Chris, you had a question about data. Do you want to jump in with that?
I mean, it wasn't a question. I guess it was more of a comment. I mean, interesting to see in the chat people referring to different databases of farmers, which I think is great. But I still not sure how that addresses the kind of commercial bank lending problem, right? Because there's still a huge amount of transaction costs in appraising lots of small loans to small-scale farmers. And Agnes mentioned land titling. I mean, the evidence from many low-income countries is that land titling doesn't suddenly lead to banks being able to use land as collateral, because you need land markets for that to work. And obviously there's other risks around that. So I'm just sort of flagging that. I think I don't see a sort of easy solution without sort of subsidies to commercial lending if you really want to get finance going in the smallholder sector. Obviously aggregation is another option, but again, it's not, there's lots of internal transaction costs to that as well, which can be problematic. Yeah, thank you.
Can I comment on the database?
Yeah, please, Agnes.
Just quickly, because I think the database is a starting point, right? But what you do with the data is the other thing. So if you build different models that tap into the different data sources that are out there, you can actually build certain credit scoring tools, because you have to give these banks also tools to make the assessment cheaper, easier, better to follow up. And still, the last mile delivery costs are going to be high. So I agree to that. And these loans are going to be tiny. I totally agree to that. But if you have to get that ball rolling so that it becomes sizable enough, right? So, but it's hard work. That it's not the golden bullet, but it was my big idea.
So look, I think we're getting pretty much to the point we need to start wrapping up. I think we might have already lost Nima because of network issues, but maybe let me just give each of our panelists a chance to have one last word, and then I think we'll sort of draw things to a close. So who'd like to kick off with a final reflection on what you've heard this afternoon? Okay, Ashani?
There is a welcome mood for risk-taking in the donor community and the development bank community. This is fantastic. There is a welcome mood as well for frontrunners like the Rabobank. They are stepping outside their comfort zone into linked sectors, deforestation being one. We need to capitalize on this, and the way to capitalize on it is to bring domestic investors along with us.
Great.
That would be the chain that Agnes is looking for to build out. That's the challenge.
Thank you. Atiyah, I think you were ready to jump in with something as well.
Yes, but of course, very different. No surprise. I think for me, it's this conversation we talked about. I think it was Bruce that mentioned about, we have to think beyond the SDGs, and we have to think beyond 2030. And I think setting up a system where we keep the human being at the center focus of decision making, no matter what type we're making, whether it is on food security or it's on the financing elements of it, just being very clear about getting good nutrition. And also, I think for me, the word is making sure that there's an element of lack of selfishness in the space, because I think we continue to prioritize ourselves as individuals and as nations from wherever we come from. And we continue to prioritize the money over the value of human life. And I think that this conversation for me is very welcome, because it's people from very different backgrounds, but all speaking towards that direction from these very different angles.
Thank you, Kate. Bruce, and then Agnes.
Yeah, no, I think it's been a very good discussion, and I think what we need to do is really, as donors, consider carefully what kind of investors are we actually trying to attract or trying to work with, and I think it's certainly I would say the likes of Agnes, people who actually think long term and are prepared to see investments through until you do see this positive social, positive environmental impact. And so basically give them auction, give them the narrative. Certainly there's a question of doing this through the de-risking, but I think there's also the matter of giving them the space, the coverage that they need in order to show that this is the kind of thing which is ultimately the future we need to work on. And if you want to increase that Venn space, Venn diagram intersection that I was talking about, and so I think keeping investments in food systems as relatively local, and trying to work with producers who, as Agnes is saying, have this long-term perspective of where investments go. That is what we're looking for, and we need to build that and increase from there. And of course, that'll take time, but I think that's probably one promising route of several.
Thank you, Bruce. Agnes?
Yeah, I was just very happy to be here on the panel, and I think it's just really great to see all these different players around the same topic. So I'm very appreciative of that, and I think the challenge is so big. We all need everybody's focus and capacity and out of the box thinking on how can we speed it up, because that's my biggest concern. That time is really ticking, and I think, and it's not so much because we agree 2030 SDGs, but I think just time is ticking for all those people out there, and I think we should be quick and smart in this case.
Right. Thank you, Agnes. Thank you, and thank you to our audience very much for joining us this afternoon. I mean, I think we've opened up the can of worms, so to speak, around all of these issues. A few things that struck me was, on one hand, we raised this afternoon quite a number of the sort of deeper structural issues about how finance actually works, from debt to transparency to risk, etc. And we also raised some very practical issues about how you get finance to those who need it in the value chain. So how can you sort of combine dealing those structural issues with some very practical things around financing? And then I think, as Nima said very early on, there's a desperate need just to get people aware and understanding what all of this stuff is about, but also actually the amount of money we need relative to the big picture is not that big, but we've got to try and restructure things to make that financing available. So I think what we've heard this afternoon is there is real possibility of doing that, but we have to do a much better job of explaining to people why it's needed, that it is possible, and the mechanisms for actually shifting the incentives for that finance to become more available. And that would seem to all of us to be a pretty good challenge to bring forward into the Financing for Development conference next year, and to make sure that the whole food and food security story isn't left out of the discussions in that event and the other events that sit around that. And hopefully that will be something that we'll be talking about in a lot more detail at the Annual General Assembly of the Global Donor Platform at the end of November. And just to reiterate, this event was sort of a little bit of a warm-up for that session that we'll have at the end of November. So I think I can leave it there and just hand over to Maurizio for a few final words as well. And again, thank you all so much. Thank you very much to the panelists for great discussions, and we look forward to continuing the engagement. Maurizio, back to you.
Thanks a lot, Jim, and thanks, colleague, for this really enticing conversation, one of many, where we hope the donor platform has been effectively contributing through what has been raised today. Now, we've heard a lot, but I have a few takeaways among many others. I promise I will be very brief. This does not mean to summarize anything about the webinar. I just want to pinpoint a few issues. The first thing I've heard is that the shifting the mindset of financing for food is fundamental. We've heard that from NEMA, that parliaments need to understand that investing in food is a good investment, but we also need to target the sectors in governments that are not traditionally associated to agriculture. We've also heard that there are structural constraints, Oshani, that are preventing public and private investors from investing. So both governments and donors need to be able to take more risks in their investment decisions, and the countries themselves need to improve their governance frameworks for donors, investors, and financial institutions to have a more palatable investment environment. We've also heard that the real challenge lies, this was from Agnes, lies with the smallest farms. Risk is difficult to manage, but this is where the real challenge lies, on their access to credit. You need to focus on the portion of the value chain that has the least productivity, and therefore the solution is with the local banks. I love this sentence here. The participation of domestic commercial banks is therefore fundamental. So what can national governments do to build a better enabling environment? What can donors do to lower the cost of capital for agriculture and make it as profitable for local banks and other sectors? And then another important area, how can we harmonize and align the language among banks, among donors? How can we, coordinate and harmonize? We're doing a big job on that with the thematic working group on blended finance, on harmonization and finding, standards for assessing blended finance. Again, the role of donor governments is fundamentally catalytic and very important, but there is so much more that needs to be factored in, so many more institutions and entities, and we need to bring domestic investors in. That is crucial. It was highlighted by many today. As usual, we only scratched the surface, but we will keep this conversation running. Do not forget our General Assembly in November, 26th, 27th of November. Go to our website, register, download everything you can download from the pages. Join us in Rome and online. You're all welcome. With this, I would like to thank our panelists, Jim, you for your great moderation as usual, and our amazing secretariat to organize and made it all possible. Thanks again to everybody for being with us today, and see you next time. Bye.
Bye. Thanks, everybody.